What's going on, traders? Hope you all are having a great week. Wanted to go over something that I've been watching here closely, this divergence that we've been seeing between SPY and the RSP. What does it really mean? So what if I told you that the market actually looks a lot healthier than most people think, even with all the noise around tech and the Magnificent Seven? All right, today I wanted to show you something that not that many traders are looking at. I wanted to point it out to you guys here on this video, the divergence between SPY and RSP and why it matters right now. Okay, the chart on the left here, we have SPY, the market cap weighted S&P 500, right? That's what most people are familiar with. On the right, we have RSP, and the difference in this ETF is it's an equal weight of all the 500 companies in the S&P, right? Same stocks, completely different weighting, right? SPY is dominated by the top names, right? You know, the Mag 7, Apple, Microsoft, Nvidia, Meta, Amazon, etc., etc. RSP gives everybody, every stock, the same voice, right? And so when these two start telling different stories, I think it's when you should make note and pay attention, right? So notice what's happening here. SPY has been going lower, right? We've broken below the daily 9 and the 20. However, we are still holding the 50-day period average on the daily. Meanwhile, the RSP just made a new high just above 200 today. So this tells us something important, right? That this rally isn't just about the Mag 7 and hope. This is really showing us that participation in the market is broad, and we're seeing a nice expansion in breadth overall, right? And that's how many stocks, right, are actually moving in an uptrend, right? And in a healthy bull market, right, leadership rotates, right? You don't want everything concentrated in one quarter of the market, right? We want strength, and obviously tech's been selling off, but industrials, financials, energy, consumer, healthcare, all contributing, and that's exactly what this chart in RSP reflects. Right, so when RSP holds up or leads, it's telling you institutions are spreading risk now and not crowding into one trade. Right, we don't have that concentration as much in that Mag 7. So of course the Mag 7 still matter. They're dragging SPY lower, and that's fine, right? But the difference now is potentially the thing that's important is the rest of the market isn't rolling over, right? In late cycle and unhealthy rallies, you usually see SPY making new highs. RSP is flatter down, right? And that's a warning flag that I like to definitely pay attention to. It's really showing narrow leadership, that concentration in the Mag 7, and that's where the market can potentially be frail, because under the hood, that base, right, isn't as strong. And we can kind of draw it here, right, as a pyramid, right? And here's SPY here concentrated by the big names, and we have RSP here. Oh, forget my artwork. Right now we're seeing more of the concentration broadening out more towards the base, right? A more solid foundation, right? So see the difference there. So I like to look at this often to look for divergences, things like this, and right now we have one. This is definitely something that we want to pay attention to, and this is how overall, as much as of a bear I am in the market overall for this year, this is how bull markets extend, right? Doesn't matter my own personal feelings, gotta pay attention to what the markets and the charts are telling us here. So unless we start seeing some flattening out or really breaking down in RSP, have to assume here that the broadening out, the breadth expansion is continuing. It's just not in the names that most people trade or are familiar with. All right, guys. Well, I hope you enjoyed this video and you learned something. Take care, and I'll see you in the market.